All right, guys, back to work here tonight. Thursday evening already, getting ready for Friday's trading session. And boy, oh boy, do we have a lot of great trades setting up on our radar to finish up the week tomorrow. You know me, I'm going to cover all my favorite trades in tonight's video. That way you get a game plan to make some money going into the weekend. As always, before we jump in and get this video going tonight, got a lot we're going to cover in tonight's video lesson. Before we do, though, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video upload. And as always, if you guys enjoyed the video tonight, do me a favor, hit that like button for me. Appreciate you guys supporting this YouTube channel and tuning in this evening. But let's get ready for Friday. Friday is not going to trade itself. We got some pretty good trades setting up for Friday. Boy, I'll tell you, lots of nice moves here on the charts to finish up the day today, right? NASDAQ is bearish, S&P bearish. Oil, of course, you can see is bullish. On the NASDAQ and the S&P, get a lot of really great areas overhead here right now. Looking for some shorts on the pullbacks on both the S&P and the NASDAQ. We do have some really nice support levels down here, though, so I wouldn't be opposed to some reversals here on the S&P and the NASDAQ as well. So I'm going to cover the short side and the long side on both the NQ and the S&P here tonight. Oil, you'll notice, of course, is bullish right now. We are long-term bearish, though. There's a couple clues here right now that are telling us that this reversal, possibly back to that range at 92, might just be the best trade of the week here coming in for all you oil traders. So we'll talk about the short side. I'll obviously cover the long side on the oil, too, in case we do break out. We get some big levels overhead here, but once you see the chart tonight, you'll see why it's a bit difficult, unless something changes, it's a bit difficult to get long here on the crude oil. Not to worry, though. I'm going to break all this stuff down tonight. We're going to go one by one, all my favorite trades for tomorrow's trading session. Before we jump in, though, let's make sure we're all on the same page for tomorrow. Tomorrow, of course, is a Friday. There isn't a lot on the schedule for tomorrow, but we do want to keep an eye on that consumer sentiment number that has been something that's been lighting these markets up over the last few months. 10 o'clock Eastern time, usually on a Friday. Fridays are kind of notorious for that 10 o'clock hour. 10 o'clock to 11 o'clock does oftentimes breed the best trades. If you could only be at your desk tomorrow for an hour, I would definitely recommend that 10 o'clock to 11 o'clock block. So we do expect that to be the biggest news that we know of about right now. We're also watching things like the situation in Russia and Ukraine and how that affects the energy. Right? We're listening in for more information about China and Taiwan, and of course Fed speakers. Right? Fed speakers are some known unknowns right now. We'll keep our eyes open or ears open tomorrow for any Fed commentary about the CPI report that was lower than expected. PPI report that came out lower than expected. Inflation seems to be tumbling here right now. Knock on wood, but we'll see if we hear any updates from the Fed tomorrow as they try to remind us that 8.5 PPI is still pretty darn high, right? We're not quite out of the woods yet. But all kidding aside, though, consumer sentiment, that is the big number here for tomorrow. And please don't forget, as I mentioned in last night's video newsletter, there will be no videos or no newsletter videos posted next week on this YouTube channel, third week of the month of August. As I mentioned last night, we'll be taking off the afternoons next week. There'll be no video updates on this YouTube channel. I'm working on some new video updates for you guys, all the students here at School of Trade. Get some good stuff coming to you guys later on this year. So just a heads up on that. No newsletter next week. I'll miss you guys, but that's all right. I'll come back the following Monday, and we'll get back at it here on the 22nd of August. Back to our charts, though. The money is on the charts. NASDAQ's ready. S&P's ready. Crude oil is ready. Now, guys, I'm going to go right on through each one of these charts here tonight. I'm going to talk about my favorite money-making trades for tomorrow. I'm going to give you different trade ideas, different trade variations, different advanced tactics as we go deeper into this video. So make sure you grab some notes, take some screenshots, and watch all the way through here. Let's jump into the NASDAQ first, starting off with the NASDAQ or the micro NASDAQ or the QQQs. A lot of our students in our trade room love the micros, love the QQQs. Now, real quickly here, first of all, everything I talk about today on the NASDAQ can pretty much be applied to the S&P and vice versa. They're very, very similar markets, so you can assume that pretty much everything is interchangeable between the NASDAQ and the S&P. This is a 4,000 tick chart here of the NASDAQ or mini NASDAQ futures contract there. If you're looking for more details, you can always find that stuff in the upper left-hand corner. There are four 4 key insights on this chart that are helping me figure out where the best trades are going to be for tomorrow. First things first is the 4-hour bias, this medium-term bias as I call it. You'll notice right now we are bearish in the short term, but we do have quite a bit of bullishness. Look at the 4-hour chart. Look at an hourly chart. You can see we're definitely making higher highs and higher lows right now. Now, obviously, we're very bearish right now, but if I can find a way to get some long trades, I would like to take that. For example, I really like the idea of a double bottom reversal off of that low tomorrow, kind of piggybacking on that medium-term bullish bias. The second thing, though, of course, is very conflicting, right? It's a strong move lower. Anytime we see a strong move in one direction, we expect to see a pullback and a retest of that extreme, in this case, of that low. Once we retest that low, then do we get that double bottom reversal, which I think might be one of the best trades for tomorrow, or do we see it break down, right, and push lower and try to take out some of these prior week close and some of these bigger levels that we have all the way down? Look at that wide open space here. I'll tell you, if the bears, if they can push through that low here, boy, look at that wide open space down to 13,000. They would love to get a chunk out of that taken out tomorrow. So we'll see how that goes. Third rule here, or third insight here, is a range breakout. Now, range breakouts are pretty cool because bear market into a trading range, whenever we see a real strong breakout like that, oftentimes price will come back and use the underbelly of that trading range. And so that, of course, is a really big clue for, finding some resistance areas we can sell on a pullback right now. And of course, that goes right hand in hand now with the fourth key component of this chart. This is a beautiful example of a pop and grind channel. We pop down, we start to kind of grind down right off of these lows. I'm simply drawing a trend line off that low, bringing it up around that high, and man, oh man, what a great spot to sell. Bears would love to short at the battle zone here. Bears would also love to short those traps right up above some of these highs up here. And of course, and I would think too, if we can go all the way back up, I would think bears would love to short off that top as well. So there's plenty of opportunities for the bears here right now. And as I mentioned before, I do think there will be some buy setups here for tomorrow. The hardest part on this, though, is going to be up in this area here. It's going to be a little bit difficult to be buying if it just kind of V-bottoms off of this low. So knowing these are the key insights right now, how do we make some money on all this information? Well, really the key right now is as we pull back, we have that real strong move down. So we know there's kind of a magnet that wants to drag price back to that low. What I always sort of do is look for levels of resistance lined up at the top of a channel, and I like how that range is right there as well. So one way to sell this, I'd like to sell it off this high, is to get this thing up around the base of that range, the top of that channel, and I'm not going to simply sell off that level because for all I know, the market may keep going higher. What I like to do is let the buyers show me their cards. Let them show me what they want to do here. Once those buyers come in and try to buy off that pullback now, remember, strong move down, wants to retest that low. Think about now where all of their stops are, right? Think about where, as we see in the trade room, think about where their pain is, right? Think about where they're starting to wave the white flag. Buyers come in, they buy that pullback. I'd like to sell right into those stop losses for a run right back down to retest the low. Now, we oftentimes will get one of these, a failure into, as it rolls over, a pullback. Now, just make sure, though, you grab that pullback roughly before the halfway point back to that low. Make sense? So if I was to measure how kind of deep that pullback is, think about where the halfway point is, and you want that add-on, that pullback setup, you want that to be before that halfway point. Why the halfway point? Because that gives you the risk reward that makes it, well, it increases your odds because everybody else is going to want that risk reward too. So I always make sure to tell my students to make sure we get that pullback add-on before we get too close to that low, right? Does that make sense? Okay, that's one way to do it, right? That's that failure into pullback combination. Now, another thing I love about this, like I mentioned earlier, is this area right up here. Okay, this would be a great spot for a trap area. I've got a little bit of a trend line, right, coming up here as well. Now, that would really be a great spot to sell short because then, of course, you're getting a better risk-reward ratio. But if we really pull back really deep here right now, what's the challenge, though? Again, great, fantastic risk-reward ratio, small risk, big reward. But remember, there's always going to be a trade-off between risk-reward and momentum. So in this case, if we get that really deep pullback, trapping above some of these highs, getting in around that trend line, which I like so much right now we got to worry because, again, momentum now is getting much stronger. The buyers are going to see that deep pullback. They're going to think this is a reversal, and they're going to throw the kitchen sink at it and try to run back up to retest the high. I have to let them dig their own grave on that because, again, that will be pretty strong for the bulls. Let those buyers now try twice. Okay, this is exactly what I like to use for signs of exhaustion. Once those buyers now start to try a couple times, now we know where their stops are, right? Now we know where their exits are. Now we know where we can get an edge, right? That's where all the buyers get stopped out. When you're long and you get bounced out with your stop, you have to sell your way out. So it's a very, very easy, right? Very, very easy idea here. It's not that complicated, right? Let the buyers show what they're doing here and then wait for that nice strong signal, and we can then dump it back down from there, right? Now remember, on this point, where do the bears want to go? They want to get back down to retest that low, right? Okay, plenty of space for a good target, but now as the market begins to roll over like this, now what I'll do is I'll draw a trend line off that low. I'll mark that trend line for a channel up off that high, and then repeat after me. Look left, find that trap, and first test is the best test. Okay, now I love traps, right, above those prior swings. I love traps. This could be a buyer failure, like I mentioned before, right? There's a lot of options we have. It's all the same entry pattern setups that we teach you guys in the free trading course. And which reminds me, I know that most of you guys and gals have taken the free classes. You've learned all the setups. You know what the rules are. You know when to take them, and most importantly, when to skip them. I get so many great emails from you guys every week making money off the free classes on the website. But listen, if you're one of the few folks who haven't taken that course yet and learned all the entry tactics I'm talking about here tonight, grab that link. I'll put a little link up here for you in the upper right hand corner. The strategy that I teach in that free trading course will get you into far more winning trades. It'll give you a ton of confidence every day because you'll have a good roadmap to follow. If you're missing too many good trades, if you're like me and you hate missing a good trade, or you're taking too many losses or making too many mental mistakes, that strategy I teach will get you right back on the right track. It's a perfect course, free course to transition to full-time trading. So grab that link up there. That way, the next time I get that deep pullback, right, you'll know how to look for the 1, the 2, you'll know how to sell into those stop losses, and you'll know how to find the channels. And again, most importantly, you'll know what to be looking for each day, whether you're trading on your own or you're trading with us every morning in our trade room. Now, here's something to think about as we go higher, right? Let's say, for example, that we pop up. Right, we take out those highs, but now the buyers, they don't fail, and roll over. Now they hold and they really jump, right, and they rip this thing going higher. These are very simple reversal patterns. We call these a 1, 2, 3 reversal. Very simple. 1, 2, jump off that moving average, and that becomes your reversal. Now, at this point, it's all about timing at this point. We got to be very careful up here, right? Because you can easily see there's some wicks up there. In all reality, this whole area up here really could be one big resistance zone. Got to be very, very careful being a buyer. I mentioned this earlier. This is going to be the hardest spot to be a buyer here. What you'll want to do is, if we can get this thing to bounce off the low, if we can get the buyers to come in and really jump, right? This has to be a very convincing reversal off of that moving average. Once I have that, if I can get in before we get up around this area, 45 3/4 or so, what I'm going to do is mark off that high, mark off that low, look for those trap levels, right? And you're going to learn all about trap levels in that free trading course that I mentioned earlier. But find those traps, and you're going to want to get below one of these prior swings. At the very least, get below the moving average. Let those bears come in and try to sell it. Remember, at this point now, it's a very strong move, which means they're going to want to retest that high. So I can trap in the bears and use their stops as fuel. That should be enough to give us a nice winner off the low of that channel. Remember though, be careful with this. If they just simply snap this right up, you can be very careful buying into those highs here right now. Again, major level of resistance. And at that point, it will have made a very big move at that point. It will be difficult to buy up there. What I would imagine though is I would imagine a 1, 2, 3 move, right? So 1, 2, 3 reversal, find that channel, right? Find that channel. Grab that scalp. It won't be a huge trade, right? Grab that scalp, get that, right? Get up into that area. And then from there, this is where I think another really good short can be setting up. Now we're at major resistance with a range below us. Ranges are magnets. And now we start looking for, remember those 3 rules for trading reversal? What are the 3 rules for reversal? 1, we've got to be at a major turning point, right? Second, we get to see signs of exhaustion. And third, we get to run the stops, right? To get a catalyst, right? To get some sort of edge in the market. Major turning point at the high of day from today. Signs of exhaustion, 1 try, 2 try, right? Let those buyers dig their own grave. Remember, the smart money's buying down here. Right, the smart money's buying low. These are the weekends, right? These are the small traders, the inexperienced traders. They're too late. They're too late. They're getting in when professionals are getting out. It happens to all of us. We all have to kind of pay our tuition to the markets to learn this stuff, or you got to find a mentor, find a coach like I did almost 15 years ago, right? So once those buyers start twice, right? That's our signs of exhaustion now. And now think about where those stops are, and we're selling right into stop losses. This is a very attractive short now because now you've got this major top in place, range magnet down below us. Very, very nice looking short here up around these highs. Get that, right? Get that failure. And then don't forget, your job isn't done yet. This could be the easiest part of that short. Mark off that channel or mark off that trend line, find that channel, and then grab that first test off that high. We just talked about this morning in the trade room. Sometimes we don't get a good signal for the reversal. Sometimes we don't have the confidence to trade that reversal, but that first test, that's the one that you almost always can get very aggressive on. It's one of the easiest money-making trades because the momentum at that point has already turned over. So I really like that short off the high there. So I definitely think there's opportunity going higher to be a buyer, but you better play it tight, right? Keep it close to the vest, as they say. We don't want to be getting into pullbacks way up top here. Better to wait for those double top 2 tries and then drop it back down again. So that covers it now as we pull back. But here's a really important question, right? What if we go up, down? How do I buy off this low? Because I like that trade a lot. I like that trade because the 4-hour bias is bullish. So in all reality, if I can find a clear entry getting long, I like the idea of that. How do we buy it off that low? Or what if the market keeps on going lower? What if it keeps on going low? How do we trade that? Why don't we take a look at let's talk about that on the S&P, right? The Nasdaq is pretty well kind of thought out here right now. Let's grab the S&P. And again, keep in mind, everything we talk about right now on the S&P can be applied to the Nasdaq as well. This is an 8,000 tick chart here on the S&P 500 here tonight. And again, this is the ES. This could easily be the MES, the micro S&P, or it could easily be the SPY, right? The ETF counterpart. I have a lot of students trading the SPY and the triple Qs in our trade room right now. However you want to apply this, there are 3 basic insights here on the S&P. A lot of them are very similar. This is no range involved on this S&P. We do have a 4-hour bullish bias, which again, if I can find my way into something up here before we take out some of these highs, I'm interested. I think the better trade though is the double bottom reversal off of that low, because then you're not buying high, you're buying very low. Second key component here is a strong move down, right? That move lower is a pretty strong move. anytime we see a strong move, we want to respect that direction and expect a retest of that low. Once we get that retest, do we get double bottom or do we blast and run lower with a breakout? And then here's one thing that's kind of a very big standout that is different between the S&P and the Nasdaq, and that is this two-legged pullback. Okay, two-legged pullbacks they can be your best friend or they can be your worst enemy. The key to a two-legged pullback is to either get short with enough space above it, or the trend line, I should say, or get underneath that trend line and use it right there. So when you think about a two-legged pullback, you know what I mean, right? And I call it a two-legged pullback because there's two legs to it. We go lower, we pull back to the moving average, we try once, right, and we go higher. Not every pullback will do this, right? Not every pullback will do this. A lot of pullbacks will be simple pullbacks that simply have one leg to it. So the key again is draw a trend line off those lows, go from wick to body, okay? The wick low to the body of that red candle. And then from there, it's all about, really it's one of two scenarios. Can I get up with enough space up here so I'm not worried about selling into it, or can I get underneath it and use it for a short right there? So real quickly here, the best way to do something like this is use a trap or a breakout pullback. Okay, so for example, there's my trend line right now. As we go, hold on real quick, let me clean this off here. I'm sorry for the delay on this. I want to make sure, but I want to make sure you can see it. So if we do pull back here right now, remember, I like the idea of that two try, right? 1 and 2. What's the problem though? I'm going to be selling right into that trend line. Okay, those are asking for trouble. Sometimes they hold, sometimes they don't. I always say, if it's a rising support trend line, try to get a trap. Okay, traps are always your best friend whenever you've got a trend line in the way. Okay, so in this scenario, we go up, we get up into that big area where we're kind of more worried about momentum, and now the buyers try twice, and that trap entry, that's a beautiful short, and everybody's waiting for it because, of course, that trend line acting as support. Now, if we get back underneath it, the one thing you want to kind of keep in mind on this is you don't want to get a real quick trigger on this. So as it pulls back to that trend line, what you really got to be careful with is these very small little breakout pullbacks like that. Okay, the small ones don't work as well. What I always tell my students is you want there to be some daylight in between the breakdown, right, and the pullback. It's tough to describe what that's going to look like. You know what I mean? But what you want to be careful with is, remember, this trend line, there's a lot of variations of how that trend line could be drawn. You know what I mean? I like to think of trend lines as being like a big thick line rather than one thin line. You know what I'm saying? Right? So you got to be careful with those really small ones because sometimes it'll try and it'll still kick back up. So you want to get a pretty good amount underneath it so you've really cleared off any variations of that trend line, and then that will usually bring the moving average over and you can grab that first test off of that, right off of that trend line. That's probably the only differences between the S&P and the Nasdaq as far as the pullback goes, right? So keep that on your radar. Again, one small difference there between the S&P and that Nasdaq. Now, got that out of the way here right now. I'm going to get rid of that trend line for a moment. Let's talk about that double bottom reversal. Okay, because I love this trade for tomorrow. Again, 4-hour, right, or medium-term direction is bullish. Okay, so now we get that move up, right? We get that 1, 2, that trap, whatever. We go back down to retest the low. As we always say, now it's mission accomplished. We have a strong move down. The bears retest the low. Now, the smart money, the experienced traders are selling high, right? Because they get a good risk-reward ratio, small amount of risk, big amount of potential reward. Those are where desirable trades happen. Now, down here, these are the weekends. This is the dumb money. These are the inexperienced traders. The small stops, they're not going to protect themselves like bigger traders can, like big lot traders can. So at this point now, rope them in, right? Let them try it once. Let them try twice. Think about where all their stops are and target buying into those stops. One of my mentors in this business a very long time ago, he said, Joe, when it comes to day trading, the easiest money you're ever going to make is when you're getting long, right, at a support level, and short sellers are stuck in a losing position or in a negative position because they're pinned in and they got to get out. They got to buy their way out. It's one of the easiest ways to make money in day trading. And so once those bears try twice, now we know where their pain is, and now we can look for that nice signal coming off of there, and I can look for that two-try failure going higher. Then again, as I keep mentioning here, your job isn't over yet. At this point, where do the bulls want to get to? They want to get to that high right there. They want to get to that high right there. Does that make sense? Right? So I want to find a way in before I get up there. So now what I'll do is I'll go over here now, find a new channel, right? Find that channel off the high. Always draw channels backwards. It gives you better entries that way. Draw off the high, bring it down to that low, mark up that prior swing. I love traps, but these could be either traps or failures or pullbacks. And again, some good targets on this. Absolutely back up around those highs there. And oftentimes what happens is these become big ranges. So we go up, we double bottom, we go up, we double top, and they become some big range here, right? So it's we go lower, it's 1, 2, back up, right? We go up, it's buyer failure, back down, right? Why only a buyer failure up here? Because we're bearish, right? Because we're bearish. Make sense? So keep an eye on that. That's a very common little dance they'll play as they try to develop into new trading ranges. Here is another scenario for tomorrow. What if we end up going lower here? Okay, on the NASDAQ, we talked about that prior week close and that 13,000. We have a ton of open space here on the S&P. There are, for the most part, there are 3 basic breakdown patterns you want to keep on your radar for tomorrow. You ready? And again, all 3 of these will apply to the NASDAQ as well. First one, let's say we open up in Asia, market takes a nosedive and runs lower. Strong move down. Shallow pullback to the moving average, lower low in price, and as we always say, traps, baby, traps, baby. Now, these are very, very common. There's one right here, right? We see a strong move down, shallow pullback, lower low in price, right? And we see that trap. These happen all the time on pretty much every liquid market. So keep an eye out for that 2-try breakdown. And remember, if you can find that channel, right, that definitely won't be a problem. That definitely won't hurt. Not required, but definitely an add-on that really gives you a lot more confidence in the entry off that. Also, another one of my favorites right now is that pop and grind down. Okay, the pop and grind is an easy giveaway. It pops lower and it almost like sleepwalks. You know, it almost like a slinky that rolls down a flight of stairs. I know kids don't probably play with slinkies anymore, right? But, right, as it rolls down those stairs there, mark that low, nice and tight. Okay, don't go out like this and find a bigger channel. That usually is going to waste your time, right? Mark a trend line, nice and tight off that low, bring it up around that high, and then start looking left, right? And find some of those prior swings. The best entry will almost always come right up, in this case, above a prior swing, okay, or below a prior swing if you're in a bull environment. All right. And again, I'm keeping it simple right now. This could be any of the entry setups that we talk about in that free trading course, which again reminds me, I have hundreds of examples of pop and grind channels and failure setups as part of that free class. So what are you waiting for? If I haven't convinced you yet, definitely grab that link that popped up there in the upper right-hand corner. The third one here would be we take out that low, we pull back to the moving average, and we blast off that moving average. We call these 1, 2, 3 moves, 1, 2, 3 breakout, mark that low, mark that high, mark those prior swings, and use those levels as resistance in combination with any of my entry setups. Where does the market want to go at that point, right? It wants to go down and it wants to take out some of these big lows down here. That was the CPI low, or, that was the pullback after that CPI report. If there's one place the bears would love to go, it's right there, right? That 41.78 level. I doubt we're going to go all the way back to the prior week close. On the NASDAQ, the prior week close is pretty close by. The prior week close on the S&P, though, is about a mile away right now. I'm not saying it can't happen. Fridays, summertime Friday, it might, but it seems a little bit unrealistic that we go that far down tomorrow. But hey, don't count anything out in this world we live in right now. You never know we're going to wake up to, right, what mess we waking up to tomorrow morning at the opening bell. So we're going to keep an eye on that. Got a good plan now on the S&P. I like this. A lot of really good setups we're tracking here on both the E-mini, right, and on the Nasdaq. So we wrap things up. Here on the oil? Oil is very interesting right now. Now remember, there's a lot of geopolitical stuff going on right now between Russia and today we heard about an oil leak in the Gulf of Mexico. I believe that's where it was, right? They found an oil leak and they're working around that. I assume that's where this kind of breakout, higher came from here today. So we are, we're always, oil is very much a news-driven market. It's always been, whether it be OPEC or whether it be the invasion of Ukraine or whether it be, whatever trouble they're getting into in the Gulf of Mexico here in the U.S. So be aware of that. Headlines drive this market, so we do want to be aware that we'll do our best tonight to prep it. But, there's always kind of that lingering variable coming out tomorrow at some point that may shake this thing up. 3 key insights here for the oil market here, or the USO, right? A lot of my students trade the USO with us in our trade room. The 4-hour bias is bearish. Okay, now you can see we're very bullish right now, right? So with that 4-hour bias being bearish, we start to really like the idea of maybe a double top reversal, kind of the opposite we're talking about on the E-minis. I could easily see this market turning over and making a run back around that 91.5. Keep in mind, we're at 95 right now. 95, big round number. Back to 90 would be where the bears would like to go next. We've been talking about this all week. 90, 95, 100, right? Those big round numbers, those $5 moves are very common right now. Second key component here, second insight here is a measured move breakout. We began the day in a range. We break out into a measured move. These are very, very common reversal points, right? Ranges start off as magnets. The market breaks out. They make a measured move, right? Because, of course, anytime we see a strong move in one direction, we expect a retest of that level. Measured moves after a range breakout are very common for reversal areas. They're not a guarantee. But they are very common for reversal areas. That makes me think here there might be some good shorts setting up here for tomorrow. Third thing is a strong move retested. From what I can tell right now, it looks like these buyers had that strong run up. They pulled it back, and they've already retested that high. Why is it important? Well, because anytime we see a strong move that retests, now we know, okay, job done. Mission accomplished, right? The buyers got what they wanted. We know anytime we see a strong move, we should expect a retest, and then we can look for that reversal or look for a blast through. Doesn't look like that's the case right now, but hey, we'll see how the overnight session goes, and we'll see what headlines we get as we come into for tomorrow. So knowing all of this, how do we make some money on this? I don't like the long side on this right now. The way this thing has come up and retested, the way those bears are starting to jump off that moving average, not my favorite trade right now for a long. As the market goes higher, I really like either a crown reversal, which would be a 1 try for the buyers, 2 try for the buyers, and a short above, in this case, it is that trap right there, right about that 94.49, right? So we go up. The buyers have now tried once. We go lower. The buyers now try twice. That would be a crown reversal. Now, these crown reversal patterns, right, which is basically a two try for the buyers, a trap high. These crown reversal patterns, they love to really roll over and then go into those grinders, right? As the market rolls over, they want to go back into that range. And I would imagine if we can get that crown reversal, we can then piggyback off of that and start looking for additional trap entries off the high of that channel, right? So I like the crown reversal, that trap high short, and I like that, well, put it this way, I really like that first test off the high of that channel. Remember, we may not get a very good reversal signal. A lot of times we don't. But once that momentum rolls over and you go, okay, they want that low, you start seeing it tumble like this, like we saw today on the S&P and the Nasdaq, you're going, okay, just get me in somehow off the top of that channel. That's a really, really reliable trade at that point because momentum's already turned. There's no doubt about who has control of it. Now, another way to do it would be is if we do pull back and double top, right? Or, come close double topping. It may go a little bit ahead, it may go through it a little bit, it may stall out a little bit, but same idea. We go back up and retest the high. Remember, the smart money are buying low. The dumb money is buying high. Let the dumb money, and I hate to use that term, but that's kind of the lack of a better word on that one, right? The weak hands, the inexperienced traders, right? The disadvantaged traders that are in the market haven't learned this lesson yet, right? You got to teach them a lesson. It's our job to kind of reinforce the right habits, not to buy high, right? That's a way to think about it. So buyers try once, buyers try twice. We do our service to these young minds, right? To our service. I'm kidding with you. And we sell into those stop losses, right? Somebody's going to teach them a lesson. I had to learn my way. I'm sure you know how to learn in your way as well. Mark off that low. Mark off that high. I'm having too much fun talking about this stuff right now. And we'll grab that short. This is the same exact setup we've talked about before, which would be a double bottom, right? Double bottom. 1, 2, back up and find that channel. It's the same pattern. It's just, of course, in a different direction, right? We go back up, retest the high. The buyers come in, the weekend buyers, right? The uneducated traders yet. They will soon learn this lesson. They will, especially if they watch these videos each night. We're selling right into those stops. And then again, we're grabbing that first test, which could be any of the entry patterns we've talked so many times about already. Now, what if I'm wrong? What if this market wants to keep on pumping higher? This is very similar to the S&P and the Nasdaq where we have a little bit of space overhead, okay? But take a 4-hour chart. On a 4-hour chart, 96.57 is a dream come true level for a seller. I want to see the 200 moving averages up there as well, right? So I'm pretty sure the 200 EMA is up there. There's a ton of resistance up around that 96.57, 96.50. You can see for yourself, open up a 4-hour chart, right? Is kind of how I like to look at a bit of a bigger picture. I'm a short-term trader, so I have no use for a daily chart or a weekly chart. I'm looking for levels on slightly slower time frames. Anyways, if we can get, right, remember just with the S&P, if we can get a 1-2 blast, right? If they can get this thing really jumping off that moving average, we may be able to get a pullback off that channel before we get up into that 57 area, right? But again, it's got to be pretty quick, right? This will be difficult because we have to get enough strength going through that high to really prove to us they want to break out, but we don't want too much strength because too much strength will waste all that space for us and we won't be able to get anything until we roll over right off that high. So that's a very similar technique as we talked about on the Nasdaq and the S&P, right? Get it before we retest those highs. And as you can imagine, I would imagine here, if we can make that run higher here, a crown reversal, 1, 2, for that short back down, right, into that new channel, as we keep talking about. That is a great sequence, right? So 1 try, 2 try into major resistance in an overall, again, medium term bear market right now. Drop it off those highs, and then as it rolls over, the moving average will come over, right, and we'll start looking for those shorts off that first test. Okay, I like that. I like that a lot. Or it pops up, it retests that high, and then I can be a whole lot more aggressive now because now we've retested. I can go 1, 2, stops are sitting right there. I can sell into those stops and then grab that channel. And again, the one you really don't want to miss, the one you really can't afford to miss is that first test off of that high. And keep in mind too, right? Keep in mind a lot of times these things will really pop and drop like this, and you'll want to go nice and tight, right, and find that channel like that, right? Those pop and grind channels are very common in these lower volume summertime months. Where does the market want to go at that point? It'll want to take out that low. It'll want to take out that low. It'll want to go back to that range down there at 91.90, like that short off that high here. And then speaking of shorts, what if we never get the market going higher? What could we do on this? Well, let's say it pops up, right, and they blast running lower. That's when it's easy. Find that low, mark up that high, and sell that first test. right? Target back down to retest those lows. So if we get that pop above that high, right, it's pretty easy. It's a 1, 2, 3 reversal, and we can look for that short. Again, any one of the entry patterns will work off the top of that one. Or let's say they pop down and they grind going lower. You got it. Mark off that low, mark off that high, mark those swings, and don't miss that. Don't miss that first test as we come off the high of that channel. Lots of different ways we can grab that short as they try to bury that low here. All right, guys, we'll keep our eyes open for any headlines overnight. And, of course, tomorrow's a Friday, so early in, early out. Make that money early tomorrow. And I'll tell you, I'm going to miss you guys next week. I hate to leave you guys hanging next week, but don't forget, there'll be no video uploads next week. We'll come back on the 22nd. If you're a student of mine, if you're a member of mine, not to worry. I got you covered. I'm always here for you if you're a client of mine. But if you're here just on YouTube, there'll be no uploads until the 22nd, right? Not next week, but the following week after that. And we'll come back and we'll get after it to finish up what has been a very good month in our trade room of the month of August so far, and we're not even halfway through it. Guys, the game plan is ready for tomorrow. Now it's time to get ready to trade that game plan tomorrow. I'm going to put all the free course links, all the trade room links. If I don't see you guys in the trade room, I'll see you guys after we come back after our third week of August break. I got some great stuff I'm working on right now for all of our students here. I'm excited to get that published and released to all of our clients here at SOT. Don't be afraid to call the office. Again, grab the free course links, grab the membership links, and I'll see you in the trade room tomorrow morning. If not, call the office. That's the easiest way to get help, is to pick up the phone and call us. I can help with any questions you might have along the way. You could always use the chat box there as well. That live chat works too. All right, guys. Hope you enjoyed the video. Hope you hit that like button. Hit that like button if you guys enjoy it tonight. Hit that subscribe button. Set those notifications that way you don't miss my next video upload. And I will plan on seeing you guys same time, same place, back here on the 22nd. If not, I'll see you soon in the trade room. All right, guys. My name is Joseph. Be well. Be nice to each other, will ya? And you better be here next time, right? Adios, amigos. Bye-bye for now.